Hey everyone, Rob Foglia, Foglia Properties at Keller Williams Realty, and it is the first week in April 2023, and we want to dive into some real estate stats. The market has been going back and forth, especially interest rates here over the last few months, and so I think it makes sense to dive deep into some numbers. We can see what's actually happening in the market and make some informed decisions. That way, y'all can make some informed decisions on what to do with your real estate, especially going into the spring. I know this time of year is a time where a lot of people think about making a move and doing some things. And it might be the right time for you, might not, just depends on your scenario. And yet let's look at the stats so you can make an informed decision. First things first, I am on just the Freddie Mac website, and we are looking at what Freddie Mac is reporting as the 30-year fixed rate mortgage average for last week, ending last week. And that's the blue line here. And you can see it's about 6.3. You could call that low to mid sixes. Because it's not always going to be this exact number. It's gonna fluctuate a little bit. That's actually a good number. It's one of the lowest we've seen this year. We saw it a little bit lower, as you can see here, these couple of weeks in January to February. Yet it is down. It's down almost half a point over just a couple of weeks ago. Um, Again, that is a really good thing. That's going to help keep the market strong, helps keep homes affordable, as affordability has taken a hit. If you haven't seen it, check out one of my Would I Buy It videos. I went into affordability and how that's affected the real estate market. But this is a good thing. Lower interest rates, homes are more affordable, means sellers can get more for homes, means buyers can afford more as well, which is a good thing. And in fact, let's just, before we jump into what the real estate market's doing, I just have a quick example to show y'all. Let's just say you're looking at purchasing a $550,000 home. Maybe you're selling your current home and you're putting 20% down, so your loan amount's 440. A couple of years ago, rates might have been around 3%, and just plugging in 200 a month for taxes, about 100 a month for insurance, you would have been looking at somewhere around $2,200 a month for that home. At what did we just see? 6.3%. It's closer to $3,000. And so that does rates are going to continue to impact things. As a home seller, that does matter to you. It does impact you. The reality is, when homes are less affordable for a home buyer, it impacts the amount of demand on your home. So just something to keep in mind. The reality is, we're not seeing 3% or 4% rates. We might not see them again. Who knows? I mean, just looking at the last 52-week range, the lowest we've seen in the last 52 weeks is almost 4.75, and that was all the way back here. That was all the way back. Well, I guess it was, the last week in March of 2022. So yeah, you can see it's trending up here, and in fact, it didn't go below. It went to 4.99 in August. So I was gonna say it didn't go below 5, but my point being, work with the stats we have right now. This is what the market's doing today. We don't know what it's going to do tomorrow, so this helps. But let's jump in and see what the market is doing locally. I just have Rutherford County pulled up here. I just pulled up one of the neighboring counties to Davidson. I could pull up Davidson too, but I like to just kind of spotlight one county at a time. And I'm looking at median sales price for Rutherford County for last month was 400,000. You can see it was even with February. Again, not a good thing, not a bad thing, just is what it is. You can see where it's actually a negative trend year over year. March of last year was at 410. This is 400. That's not surprising. I can go back and watch some of my older videos. You'd see that the reality is, with this insane hike we saw last year, this insane appreciation, just looking at Rutherford, we saw November 21 to July of 22, home prices went up like 25% roughly. I mean, just doing the quick math, that's unsustainable. We've been in an aggressive market over the last 6, 7, 8 years. In that aggressive market has seen about 10% appreciation, 25% over 9 months. That's unheard of. That can't be sustained. And the reality is, rates taking a hike here, and just going back, you can see how they definitely spiked last year and jumped up. The reality is, rates jumping up has impacted the buyer market, but the good thing is, we're not seeing this number decrease. It was going down from last year, and part of that was, I think, buyers getting used to what interest rates are now, and sellers figuring out exactly what they could get for homes. I mean, it was just kind of an adjustment period, I guess you could say. And the reality is, being at 400 here, seeing it stable, seeing it barely down compared to last year, that's a good thing. I'll be curious to see what the next couple of months look like. I'd be a little surprised, honestly, if we saw, just pulling up July right here, 440 July of last year. I'd be a little surprised based on the fact that we're at 400 here in March, unless interest rates somehow plummeted and homes were super affordable again. I'd be a little shocked to see us get back to this June, July, May, June, July numbers from last year. So that's not a bad thing. Again, if we're seeing a negative trend year over year, that's not a bad thing. Let's just keep our eyes on what's happened recently and what's happening right now. There's a stat that I love to pull up. If you've seen any of these videos of mine over the years, months of supply is one of my favorite numbers to look at when it comes to real estate, because it's kind of a pulse of the market. When months of supply helps measure what the real estate market's doing. Is it a buyer's market? Is it a seller's market? So for instance, going back to 2011, excuse me, almost 10 months of supply, that was an extreme buyer's market that we saw. Hopefully we never see that again. The flip side of that, 12 to 18 months ago, beginning of last year, 1 month of supply, that was a frenzied extreme seller's market. Honestly, hopefully we never see it that extreme again. We're at 2.2 months of supply for Rutherford County right now. That's a strong seller's market, a very, very strong seller's market. You can see it's lower than what we saw in 2020. Months of supply, again, just means the amount of homes that are out there compared to buyers, compared to how quickly homes are selling. And Rutherford is not an isolated incident. Like, let's just pull up Davidson County. Davidson County, 2.7. Yes, it's up year over year, but that's not a bad thing. It bottomed out last year at 1.7 months of supply. 2.7 again. Yes, it's an increase, but it's a good increase. It's still a strong seller's market. Still means homes are going to sell quickly. Again, as long as they're priced right, of course, they're going to sell quickly. And yet it's not this frenzied market where there's 20 offers in 20 minutes, where, buyers can't afford to buy homes any longer because sellers cash buyers are bidding up too much. Like it's starting to balance out in a good way, I think, to where the strong seller's market is a good market, in my opinion, for all. And again, it's not just Rutherford, it's not just Davidson. We'll pull up one more here. Let's just pull up Williamson County. You can see 3 months of supply. Again, it's up from the 1.3 that we saw in February of last year. And yet at the same time, I mean, just look back at June of 2020. It was 6 months of supply for Williamson County. That's a balanced market. And so 3 months, that's still a strong sellers. If we look back here, even it's going into 18, it was 4.1 months. I mean, it was 3.1 months in January of 18. So it's lower today than it was 5 years ago. And 5 years ago was that strong sellers market that people were trying to capitalize on. And so, again, just throwing that out there, because I think it does. It's good to know. It's good to know what we're working with. Again, it just means we've got to price homes correctly when we're selling them. Let's look at one more stat. And I kind of like to look at this one from an average standpoint, but median, it tells roughly the same story. It's just a little more static when we look at median. This is sales price to list price. So if you remember last year, what we were seeing was homes were selling, again, I'll say it again, 20 offers in 20 minutes, it seemed like. They were selling for great percentage points above asking. Like, for instance, the average for Williamson County in April of last year, 105.2%. Like, man, that's not sustainable. That's not good for anybody except for a seller. It's great for a seller, and yet for a buyer, it's not the best thing in the world. It's not a sustainable market. Davidson County, we saw the same thing. You see 104% last year. So meaning the average home selling in Davidson County in April or May of 2022 was selling for 4.1% of its asking price. Or if it's a $400,000 home on average, so this isn't the outlier, on average last year, it was going for 416, 417. Right now, on average, it's going for 98.3. That's not a bad thing. In fact, that to me, that tells me that the market is normalizing. In fact, go back. This is how I can tell you it's not a bad thing. The strongest market, in my opinion, that we saw here in Middle Tennessee since aside from over the last couple of years, since the recession, was 17, 18, 19, right in that range. And you can see, I mean, the average percentage points, what we were looking at was right here in the 98s. Yeah, it would peak every now and then, jump into the 99s. But the reality was we were seeing numbers in the 98s for the most part. It was actually it jumped up here, which was again insane. But so if we're back around 98%, that's a good thing. To me, that tells me that sellers are getting used to what the market is. Agents are getting used to what the market is with high interest rates or higher interest rates than they were. Buyers are getting used to it as well. And things are starting to normalize. Conditions are normalizing a little bit, at least normal for the last decade. And so I just want to share all of this because I think it's good info for us to know, for us to keep track of, for us to pay attention to. Again, if a home's priced correctly, we should be able to get right at that number, maybe a hair less according to the averages, but the reality is there are outliers that go for more, go for less. And in my opinion, if we're pricing a home right, we should be able to get just about that number. And it should go quickly, especially when we see how there's next to no inventory, 2.7. And in fact, we'll look at one more stat before we close out the video, and that is homes for sale. I can't tell you how often I'll talk to a buyer or a seller, and because of maybe an isolated dynamic that they're in, maybe they live in a neighborhood and across the street there's a neighborhood that's going up, that's being built, or maybe two houses on their street hit the market, and so they automatically they think there's just a lot of homes out there for sale. Or the flip side could be that they think there's nothing out there for sale as well. I like to just pay attention to what's actually out there, how many homes are for sale, just because it kind of tells the story. It tells us half of that supply and demand. It helps us fill in those blanks of supply and demand. And you can see, just looking back at over the last 3 years since the pandemic started, I mean, let's look at March of 2020, there were 4,357 homes for sale in Davidson County. Today, there's, we're in March, to close out March of this year, just under 2,700. So again, a jump down from over 4,300 to 2,700 in 3 years. I mean, gosh, I'm trying to do the math, the quick mental math. That's roughly, I believe this number is roughly 2/3 of the 4,300 that we saw for sale in March of 2020. Guys, my point is that inventory is still getting low, and it is still low, excuse me. And until that changes, until we see more inventory out there, I don't care if interest rates are 20%, that this right here is going to keep telling the story. If we have no homes for sale, and of course this right here, months of supply as well, but if we have no homes for sale that are out there, it's still going to be a seller's market. It's just supply and demand. It's that scale. Right. If you have more buyers and they're weighing this side down, and these are the sellers, they're getting pushed up. So even if there were 10 homes for sale, but there are 20 buyers, it's still the same thing. It's still that the sellers are getting pushed up. And so I just like to share that, because if you're on the fence about selling a home, I think now's a great time to look at all of this. We don't know what how long these market conditions are going to last. Anybody's bet and guess is as good as mine in terms of interest rates. They could jump up even more this year. They could jump down more this year. We don't know. Again, work with the info that we have at hand. Don't speculate, because when we speculate, we're guessing. And it's just like Vegas. You can go to Vegas and you can hit the jackpot, or you can go to Vegas and walk out with nothing in your pocket. Same thing happens when we speculate and when we guess. And so I just wanted to share all this. I'll cut the video off here, but as always, if you need anything, reach out. You can PM me if you're seeing this on Facebook. If you're getting this in your email and you have a question, hit that reply button. Happy to help. Or you can always give me a call, 615-591-5665. Thank you all so much, and we'll talk soon.